Good morning. Happy Monday. Hey Tampa, how you doing? Hey Moran, Shark. Welcome to the folks joining us on YouTube as well. So, well, at least it's the last trading day of the month. And we have, boy, well, we have our overnight inventory. Now, I didn't make this up. The market profile guys did. It does help though. Overnight inventory is 100% long. Now, the reason why it's 100% long is because every single trade is above Friday's close. Also, if the market were to open here at 62.53, we would open on a gap. So we are outside of Friday's range, which means change, right? So if there's change in pricing, it means something is different. So what's different? Last trading day of the month, everybody, his dog, his cat, his parrot, alligator, ferret, whatever type of animal, they're all short. Everybody's short this market. There are visible short positions, and then there are short positions that are really a little bit more subtle, but they're there because the market will be bid when you come back down. Like right here, there's a short position, for example. That's the freshest one. So let's go take a look and see what this looks like here. We have, this is your newest short position, right? This little green box. And the reason, when people explain things to you in trading, I want you to actually ask them why, right? If they can't answer why, then they really shouldn't be talking. There's a short position here because when we took the old high, anyone who had their buy stop here would have had that stop executed. Larger traders who don't use physical stops will be bid to cover in this area. That creates bids. That equals support. Support comes from short sellers. And then if the shorts hold a market up long enough, longs will come in and buy. That's just human nature. So that's why when the market's coming down like this is where market profile is really useful. You can see how it's filling in those shorts? That means there's a little bit of supply. Right? So the market goes up to create demand, it goes back down to fill in that demand with supply. That's how you distribute size. Right? What is the purpose of the market? The market is to distribute size. Right? It's to sell large quantities of goods at high price for profit. That's why it's a market. So as it backfills these single prints, we're going to see exactly how strong this bid is at 52. If the buyers here, right, if they see that sellers are desperate, they will lower their buy orders down to that J low at 62.50. So for example, if you're short, this is the practical use of that information. Say you're short 54, your stop is the overnight high. When these single prints fill, right, if they don't fill, you cover. If they fill, right, you can say you're short 54, wait a minute, right? Your stop is here, right? when it gets down here, you anticipate a little bit of buying. So maybe if you're short 3 contracts, right, you cover one here. And then you'd put bids down here to see if the market hits you. Now, if the market doesn't fill these lower orders, what does that mean? It means the market's going to turn and rotate higher to look for sellers at a higher price. It means that the sellers have seen buyers and they're going to raise price. If the sellers don't see buyers, they will lower price and then they will fill those remaining 2 bids you have. So you're short 3 here, you buy one back here, and then you put your orders in. Now, if those orders don't get filled, you can just flatten the trade for profit. Make sense? Right? It's practical, right? If you are short, you're a buyer. If you can't buy anything down here, what does that tell you as a business operator? Right? If there's nothing for sale in Tuscany under 62.52, you're going to have to cover your short here. Because what's going to happen is on markets like this, it'll rotate all the way back up. And why would you cut into that profit? Right? When in doubt, get the F out. Right? Pretty simple. Right? Very simple. Right? That works for trading and haunted houses. Just so you know. Okay? Works in both situations. Trading, haunted houses, you know, and also barroom brawls. Right? So here's my balance is 62.37 to 42. Right? I used this area as a balance. And let's see here. Now we're coming back underneath 52. So now if you're short and you're patient, you should be able to get some love down here in the 51 area, 50 and 3/4 on the bids, right? When in doubt, get the hell out. It applies to a lot of things in life. Barroom brawls, haunted houses, you know, bad trades. It all works. Take the money and run, just like the song, right, Tampa Trader? A classic. Is that Steve Winwood? I can't remember. See, now you're getting filled in that 51 area, right where the J-Lo is, right? There is a business reason which creates Steve Miller. Thanks, Leslie. That should be the theme song of every retail trader when they're learning how to trade. Now, once you start getting comfortable with price action, right, then you can stay in trades longer, right? But the chart's going to tell you when the buying and the selling starts to slow down. You saw Metallica? I can't even remember the last time I went to a concert. How did it feel going to a concert? That's one thing. No, I did go to a concert 2 years ago in Hampstead Heath in London. Oh, that's cool. Older people go out here as opposed to Canada, where no one over the age of 30 is allowed out at night. Oh, that's cool. It's true. Once you're 30 years old in Canada, you're not allowed to go outside. You got to stay home and watch hockey. I don't know when that changed. I guess I didn't get the memo. I went to a pub once when I was looking after my mom. We went out at 9 o'clock. Everyone was like 20 years old. They're like, ah, Grandpa's here. I'm like, holy cow, the world has changed. Who did I see? It was a band called James. It's my girlfriend's. She loves that band. James, something like James. Yeah, and not Jane's Addiction. Um, and what was the other band? I can't remember now. It was pretty cool. It was the first time I've been to a concert in 20 years. So we're just kind of slowly leaking lower. This is good. This is healthy. This market's a little weird with all this straight up, straight up. We need a little liquidation. Right now, the point of control is down here at 62.38. It's 1,546 contracts. Let's see if we can move it up somewhere here, maybe. Oh, that's right. And then we saw Brian Ferry. I forgot. Damn. It's a good thing I have Raj around to remind me. My memory is getting. The older I get, the only thing I remember are deals. It's brutal. It's like 25 years of my life where all I did was do deals, and I don't remember anything. Everything's like just, oh yeah, that year. Oh yeah, we did this deal, and we did this in that deal. We took the stock from here to here. You know, it's weird. It's kind of interesting. If you pay attention to these charts, right, while we're waiting for the next trade, you see how there's like a little squared off area here, that balance? And notice how we just stopped right before there? So this is like a little mini cost basis. We took and we sold it up here, and then we put it on sale right back to cost basis. That's why we're kind of slowing down here. Now let's see what kind of selling we get. What we're looking for now is the bid, right? The bid is where the sellers stop selling. It's where they see a little bit of buying activity and they stop selling and raise price. And it's all electronic now. So the efficiency of being a distributor now, I was looking at the Bloomberg data suite yesterday, and I was looking at all the execution methods they have and their algorithms, and it's just the technology now for someone who's selling product. In the old days, I was working the phones like one of those old operators. Had 6 phone lines going simultaneously, 2 cell phones, and thank God for AOL Instant Messenger because I could instant message a couple of trade desks without having to call them. Now it's all done electronically. You don't even have to think. The algorithms go and they're programmed and they learn, and it's just absolutely amazing. So as soon as they spot order flow under 50, they start lifting the offer. The offer is the red line that is moving higher on the 1-minute chart. This right here, right? If the selling software sees that there are buyers, it will lift. Good question, Tim. Tim's asking, would you be more inclined to, to short now that month end is past? I would not short. I don't mind shorting, like the short we just did, right? This is what I call a hit and run short. right? You short 54, right? Because you've noticed that there are sellers here. You put your stop here and you cover a little here, right? That's a hit and run short. That's shorting the backfill. That's shorting the little sale, right? Position short, I would be very careful going into the 4th of July. Now, I'm not saying it might not all fall apart tomorrow morning or later on today, but I have not identified sellers that are desperate to lower price yet. So any market, any time, until you see, if you're a position trader, remember, you don't have to call the top. Everyone's aching to short this thing. And people can't stop themselves, and they've been shorting it, and that's why it keeps going higher and higher, because they have to keep buying it back, which is creating a buying frenzy, right? That's how short positions are created. I happen to know a little bit about that because I get paid a lot of money to do a short squeeze on a stock, right? It's my specialty, right? This doesn't happen because of manipulation. It happens because everybody likes to short the front end of the move. So Tim, let me show you. Let's just go to a 1-day candle wax chart, right? Just get rid of all this crap for a second. You see this? We're in the front end of the move, right? This is the front end of the move. This is the back end. You want to hit it here and put your stop here. Right now, if you were to preemptively short this thing, if it takes out those highs going into the 4th of July, you're going to be hooped. Does that make sense? So what you want to do is you want to identify, wait till it starts selling, then you've got a place to put your stop. Right? There your risk is managed. Does that make sense to everybody? Always short the back end of the move. The front end of the move are for the people who are long to distribute or sell their inventory. But until they put the product on sale and start price competing, don't short it. That goes in any market. Always short the back end of the move. Never short the front end of the move. If you understand how markets work, you won't short the front end. You'll wait for the back end of the move. Does that make sense? It's about as simple as it gets, right? This is if you have 10,000 contracts for sale, you can sell your contracts into that. That's creating the liquidity for you to get rid of your inventory. As soon as you see people marking down price on any kind of a longer term basis, right, then you can start shorting, right? These markets, because they've got such big short positions in them, are a real pain in the butt to short because they don't just drop. They drop and stick. And then they go up again. And then they drop and stick. And it's very hard price action to short on any kind of a long-term basis. It can be done. It can be done. You just have to be really patient and wait for it. Right? Ever since 2005, when they changed the laws and they changed how markets are structured, it has been very difficult to short this market, right? Unless there's a margin event. You got COVID, you got tariffs, you know, whatever else he's going to dream up. Hey, Doc, how you doing? How's your day going? Hope you had a good weekend. Yeah, margin events are great, but we never know when they're gonna show up. Right. Yeah, so ever since 2005, they've been restricting supply. right? They changed the rules, right? They changed how you short equities, right? You have to borrow the stock before you sell it, right? Oh, good stuff. Hey, congrats on your. Oh, that's good. More responsibility, but good. And now, of course, the market. You know what I'm looking forward to? I'm looking forward to some liquidation. So every time I come on at 7:30 in the morning, the market doesn't just stop trading. You know, that's what I'm looking forward to. You notice that every one of these YouTube sessions, right before the London Open, it just stops trading, right? And we're just kind of sitting here watching the paint dry. Do, 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 do. How did it work if you didn't borrow pre 2005? Oh, happy days, Rosemark. You just sold, right? Just like futures, you just sold it. Oh, that's cool. You look like a rapper in that pic, Doc. You look like one of the Beastie Boys. Yeah, shorting pre 2005 was wonderful. You didn't have to borrow stock. You just sold a little and then bought it back. So what we would do on the desk is because we knew which stock promoter was doing what deal and which ones were bad. Now we're coming down to 49. So I'm looking for 47, 46 on the downside as a target, short-term target. So we would just short sell 3 to 5 different companies off the open. And then about 45 minutes later to an hour later, you could just go and close. At least 3 out of the 5 would be profitable. Yeah, back when shorting was fun. Now shorting is like getting a root canal without any freezing. Any big news events for today? Probably not, eh? As Friday's a holiday. Bet you it's a slow week. Monday, Chicago Business Barometer. Tomorrow is PMI. Oh, Thursday's jobless claims. Thanks, Jerry. Okay, a little weekend brain here. I missed this short on the 1 minute. That was a signal to short that and put your stop above 52. The red and the green line, the red is the offer, the green is the bid. So I watch the offer. When the offer starts moving up, the market's seen buyers. When the offer starts moving down, the market The sellers are starting to compete to capture what buying there is at lower levels. Oh, nice, Moran. Well done. Nice trade. Yeah, so what we do, RC, is we just watch the offer. Do I use Bookmap at all? No, it's a waste of time. What you have to ask yourself, uh, Davis, is do you trade like 5,000 E-mini contracts where you need to see where the liquidity is so you can get rid of your position? You don't, right? All of that stuff is marketing. And no size trader would ever show you their true intent in Bookmap or in an order book. They'd be nuts. This is a business of stealth. You never announce your intentions, right? Besides, there's no actionable information off there that you can actually build a business setup around, right? All you need is a 1 minute candle chart. That's all you need. Have a good one, Tim. You can trade just off this, right? Just a few simple lines. Watch the offer. You don't need anything else. Everything else is just noise, right? I even keep VWAP off of here. I just mark it with a little purple line so we know where it is, right? It's all accumulation and distribution. There's accumulation here, distribution here, right? This is the cost basis. This is 2 times cost. This is 4 times cost. So price got a little too high. They put it on sale, and now it's being marked down, right? They're going to try and sell you all different kinds of software and special DOMs and all that stuff. I don't know. I don't have any nervous ticks. I trade the minute chart and I teach the minute chart at the trading syndicate. Because through the thousands of traders that I've taught, it works. Right? I have a specific method that's based on the business, and I use a 1 minute chart so I teach people how to think quickly and act quickly. Now, once you start becoming consistently profitable, right? So what I do is I'll teach people, and once they get up to $1,000, $2,000 a day and they're consistent, then they can start monkeying around and messing around with the method. Until then, they just do what I tell them to do. They make money. Their life is simple. They're happy, right? You don't have to overthink it. It's not cold fusion. I said we were looking for 46, 47. There it is. Boom. Right? Learn how to think quick. Learn how to execute faster. Learn how to get out of bad positions quickly. Right? Train yourself to only trade when your opportunity presents itself, when your business setup presents itself. Focus on that. I put my trades in on the DOM. But you don't look at the DOM for information, Juan. That's for suckers. Because when I'm trading size in a stock, if I'm running a stock, the DOM is the same as a level 2. I own the level 2. You'll think something's going on only because I want you to think something's going on. Right? No large trader would ever show their intent on the DOM unless they were on a 4-night cocaine binge. You guys don't understand what it's like to trade size, right? You never show your hand. They'll pick your bones clean if you show your hand. That's the thing you guys don't realize. So they sell you all of these crazy things. Bookmap, noseprint, DOM, whips, chains, all this nonsense, right? You put your orders in on the DOM because that's where you execute off of, right? And you can slide your orders around and stuff like that. But It's pretty simple, right? Don't fall for all the marketing. Remember, the reason why retail traders don't make money is they're trained to be consumers. They're not trained to be distributors, right? You are trained to buy what they tell you and do what they want. Learn how to think for yourself. The 1 minute chart is the most accurate representation of all the transactions. Transactions are only what matters. The DOM is expressions of interest. Those are unexecuted orders. An order is meaningless until it is executed. The tape never lies. Right? I could show you level twos that I've worked where I have screenshots where there's 25 market makers on a level two screen. I'm every one of them. You just don't know it. Because I've got my hand wrapped around the throat of the stock so tightly that it needs to ask permission to breathe. Large traders will never show their intent. Right? If we're trading size and I'm running a deal, I'll trade around you 50 times before you even understand what that means. Right? You could go offer it at $5 and I'll trade a million shares around you. You won't sell one. Do you consider volume profile more important? I use both. Right? It's like chocolate and peanut butter. They work well together. You know the Reese's peanut butter cup? I like volume profile, but all I need really is this 1 minute chart. Do you see any volume on there? Right? I know that there are sellers here. Right? I know there are sellers here and here. Why? Because the top of the candle is where the sellers initiate and start to compete. So under 47, we're kind of come into this VWAP area around 42. No, that's 43. Yeah, right. You can use volume profile, right, to show you where the cost basis is in a market. But once I do that, then I know where it is in my head. I don't have to watch it. The less stuff on a screen, Davis, the better, right? We're coming into VWAP now, right? Let's just make sure I've got it in the right spot. There it is, right? So there'll be some bids at VWAP. This is a nice liquidation, right? So we weren't up here long enough and didn't sell enough product to move the overnight point of control higher, right? So now, is this just a liquidation or are we going to get more selling? See, when I started this whole thing, everybody would have these big arguments about volume and time and all of this thing. But what they forgot is it takes time to acquire volume and it also takes time to distribute volume. So they work together, you see. It takes time to accumulate, it takes time to distribute. And the longer time that you have to distribute, the better because you can sell more at higher price. So the chart just tells us, all it really does is tell us where the inventory is being accumulated and distributed. So right now, if you were a distributor, they're not buying it at 54. Put it on sale at 49. Put it on sale at 48. Put it on sale at 46. You got price competition from the people that you jammed into this thing over 50. They're selling. And the other wholesalers are selling. That's why the price is going down. Right? Longs don't cover. Longs liquidate. You zigged where you should have zagged there, Davis. Shorts cover, longs liquidate. So the green candles are shorts covering. The red candles are longs liquidating. You just got to flip the script there. There's no real barcode right now, Raj. right? It's just a nice little liquidation. Remember London used to liquidate in the old days before this whole month-end short squeeze mumbo jumbo, right? It's been so long you just don't remember. Remember London used to liquidate. It is the habit of liquidating, L period, right? It's just been so long because this market's done nothing for the last 2 weeks except keep gapping and moving higher, right? So it's kind of had us a little, you know, upside down, right? L period on that TPO chart is usually the London liquidation. Just like J period didn't correct inventory lower, and it hasn't for weeks now, right? Can anybody run the stats, or has somebody already done it and I missed it? What the market does before the fourth, going into the 4th of July holiday. Isn't it usually up? Didn't somebody say that? Somebody ran that stat last week, wasn't it? If memory serves. Somebody posted something last week, wasn't it about the 4th? Man, you guys really have more weekend brain than I do. Holy heavens. So, what's important now? Well, VWAP is here. Have we touched VWAP yet? There are bids. Somebody posted a stat, and I can't remember who, and I didn't remember the stat. So there are bids here. So the market is getting front run at VWAP. So we have found the bid for now, right? So how traders worked in the old days when we rode horses to work is you'd short the market down to the bid and then cover. Once you cover, well, then you could go long if you want, but you know that there's going to be sellers at 48, right? There's probably going to be sellers at 47 half. Yeah. Now Howard, yeah, that's all okay, Howard, but I don't want you to go down the rabbit hole with that, okay? I want you to keep your eye on the chart and don't get influenced by statistics, okay? And how many shorts are tracked, okay? Stick to your guns, okay? Because you're doing well. And I haven't heard from you in a couple of weeks, so check in with me when you can, okay? All right. Remember, in trading rooms, and our trading room is pretty good. We don't have a lot of craziness getting posted. But the most important thing for us is to maintain our focus, right? Focus on where the selling is and where they stop selling, because that is information you can use to take action to make money. So if you were short 51 as Moran was, right, and down lower, right, you found that the market front ran VWAP cover. There is not really a different mindset. It's just a different business or continuation of the business. The overnight session allows traders to get rid of inventory or acquire inventory if they didn't have a chance to do it in the daytime. A lot of the times, the overnight session, if a market runs up at the end of the day, sometimes the overnight session's a little lower. That lets shorts do some covering, right? It also lets traders access liquidity. There's less competition, right? That's all. Right? I like trading Globex because it's nice, it's calm, you can make a little money before the open. That takes the pressure off, right? I like coming into the open already made a few bucks. That way you don't have as much pressure when that bell rings and you can relax, watch the market, watch the action, right? And you can sort of take your time, sit back, see everything set up. And then when the terms and conditions of how you do business, that's a trade setup, eh? When the terms and conditions of how you do business present themselves, then you execute. You do not do business until the terms and conditions under which you do business present themselves. Right? In simpler terms, when your song comes on, then you dance to it. Right? And that setup should be repeatable, it should be expandable. During Clovis, Forrest Gump still sleeps. Yes, yes. He hasn't done any sort of late night tweeting lately, does he? I remember his first term, he'd kind of wake up at 2 in the morning and blast out a tweet. That's kind of slowed down, thankfully. Let's see. Right. Now, the reason why the market is sort of suspended here is because when we took Friday's high, there is a short position here. That's why there are bids here. The trade I would like is a look below and fail of 42. That would be nice. Right here, I'm sort of less inclined to touch it with VWAP's the goalie here, right? And the candles are getting smaller. So I think I'm just going to chill and wait. Yeah, just got to wait for your setup. Once your setup presents itself, then you can execute. Till then, just leave it alone. Otherwise, it's just going to pick your pocket, right? Exactly. So when is this tariff thing? Are they going to let us have the holiday without any tariff talk? Is it after the holiday they're going to talk about tariffs? Next week? Okay. Ah, the look below and fail, right, which is my go-to ride or die trade. Say, for example, Davis, there's 5,000 contracts for sale here. Those 5,000 contracts will get sold. So there'll be 4, 3, 2, 1. The market maker takes in 500 into his own account pro. The market lifts back up because that order is now complete. So when the market comes back up, it will look for inventory at higher price, like it's doing right now, because there's nothing for sale in Tuscany under a certain level. So when it looks below and fails, you take the long here, you put your stop here, and then you use the levels to sell. I am using 23-hour VWAP, RC Roy. Now I know you guys like to anchor VWAP all over the place. I anchor it at 6 p.m. Eastern Time, the 23-hour session open. And I leave it. Oh, thanks, Moran. Right? So the business reason for the look below and fail, right? And that's what we teach in the trading syndicate, right? There's a business reason for taking the trade. It means that nobody needs to sell it under 42, so you buy 43. Now, if someone comes and offers it at under 42, the reason for your trade does not exist anymore because you're buying at 43 to sell at 44, 45, 46. But if somebody's offering it at 41, what the hell's the point in you holding inventory long at 43? Makes no sense, right? The business reason is gone. When the business reason for your trade is gone, then so are you. This keeps you from adding to bad positions and making emotional decisions based on no business reason whatsoever, right? If you understand the business, you understand the chart. The chart's trying to talk to you. The reason is everybody's trying to impose their will on the chart, right? Instead of listening to the chart. It's like when you're driving and your wife or girlfriend is trying to give you directions and you're like, I'm not listening to you. I know where I'm going. Next thing you know, you wind up in the hood, you get carjacked, and they throw you in a dumpster, right? Listen to the market. It's trying to tell you, right? Pay attention. Take your ego and put it in a box. Learn how to admit you're wrong quickly. Incorporate admitting you're wrong into your trade setup so you can get out of bad trades without having a big hairy fit and having to go listen to a psychologist, right? And sit on a couch and, tell me about your childhood. No, you just made a bad business decision, right? That's all it is. Or you were early, or the order flow did not suit what was happening, right? Once you learn how to admit you're wrong, learn from why you were wrong, and then use it to trade in a more intelligent manner. Point of control moved up, Howard. We've got this good distribution, right? There is no amount of trading psychology that will fix a lack of knowledge. See, sellers at 48 and a quarter. Poked our head above. Now, if those sellers at 48 and a quarter, if they see buyers, they'll lift their offers up to 49.50. If they start to compete, we'll come back down to 47. Hey, Only Flow, what's going on? Right? None of this is random, okay? When billions of dollars are involved, nothing is random. Go try to take $100 off somebody off the street. See how they fight you. Right? Nothing's random. I don't know who came up with that. They never made a market in their life. Found some buyers in the 44, 45 range. No, compete. Davis, you put something on sale for 5. I'm a competing seller. I go 4.99. You go 4.98. Only Flow goes 4.95. RC Roy goes 4.90. Competition. Like when Walmart and Target and Best Buy, they all are selling the same TV and they're dropping prices to get rid of their inventory. Does that make sense? Remember, it's a market. That's why they call it the futures market the stock market, not the stock hot tub, right? You bring stuff in to put it on sale in size, right? There are large participants who trade size as wholesalers, right? When they compete, they lower prices to price compete to sell their inventory, right? Does that make sense? There you go. That's price competition right there. You're seeing that. And that is what you need to short. You only short when you see the sellers competing. Competing means lowering price. There you go. So we told you that there were sellers at 48 and a quarter. So if you are a fast scalper, you could short 48, 47 half, put some bids down here at 46, 45 and a half, and clip in and out. So the trades make sense. If you know there's a seller at 48, you sell next to them. Does that make sense? There's no technical pattern. It's business, right? Unfortunately, sitting in front of a screen, we don't understand that business. That's why I'm trying to educate you guys on what's going on that's creating the chart. Otherwise, how did I know that there would be sellers at 48? Because I used to be the seller. And if I'd sold there before, when it gets back up there, I'm going to sell some. Right? Because the objective is to turn your inventory into cash. That's why it's called a market. So if you were short 47 and a half, stop 48 quarter, right? Put some bids in here at the 45s, right? It's got to make sense, right, Roy? Right? It's a business. If it doesn't make sense, how could the business survive for thousands of years if it doesn't make sense? It's just got to make simple, basic, common sense. And that's what they don't teach you in any trading room except ours. They will teach you indicators and schmindicators and patterns, bulls holding flags, how they do so with hooves, they don't have opposable thumbs, all this nonsense without teaching you why it's happening, right? We teach you why it's happening so you can actually make money instead of floundering around and blowing accounts, right? Sorry, I've had a lot of caffeine. So it's good we have sellers, right? It's good that we have a little bit of selling. Hopefully, when the market opens, we won't have a gap. What I'm really hoping for is lower down here, right? Because I don't want another gap. And liquidation makes the price action much better, much more tradable, right? When markets liquidate, it's like it's like you've given them a little bit of liquid wrench or WD-40. It's healthy. Yeah, come check us out at the Trading Syndicate. It's like 50 cents a day. And you don't have to sign up for any long length of time, right? You can try it for a month. Use the 25% off code. And now when you get in the room, message me so I can help you through it, because sometimes these trading rooms are confusing. So if you do sign up, message me. I'll help walk you through it so you don't just sign up and then quit, right? Right? And what I'm trying to say is it's not that we want your money. We want you to actually have a good experience and actually learn something that you can use, right? To make a living. That's what we want. So DM me and I'll help you out. I should do a 101 session, eh? I haven't done one of those in a long time. Maybe after the holiday. See, now this is chop. This is pure ultra chop, right? The overhanging inventory here is being absorbed here, right? The bid's in here at 44. So for us now, just chill and wait for the next setup. Everything we teach you, I promise you, will be based on common sense, and there'll be a reason for everything that I can explain, and it'll make business sense. And thank you, everyone, for being with us. Have a wonderful and safe morning. We'll see you at 9 o'clock New York time for the next session. Have a wonderful morning. Be safe out there. Right? And remember, don't take candy from strange market makers. Thanks, everyone. Bye for now.